Something doesn't make sense. Why are all of those altcoins appreciating while at the same time the AI bubble is popping and Bitcoin isn't performing that well either? Bitcoin dominance, for example, has barely moved. But Ethereum dominance looks very different. It rallied much more. How is it possible that the riskier assets in crypto suddenly appreciate when money is still flowing out of the space? This is the stablecoin market cap over time. Now here's something most people do not know. The altcoins actually move much more in sync with Ethereum than with Bitcoin. Most people think that when Bitcoin goes up, the altcoins go up. And when Bitcoin goes down, the altcoins go down. But really, the connection between altcoin price movements is much stronger with Ethereum than with Bitcoin. The altcoin market cap is in green. The Ethereum market cap is in blue. And here we've got the altcoins relative to Bitcoin. Check this out. This is the 6-month correlation coefficient between the altcoins and Bitcoin and between the altcoins and Ethereum. This correlation coefficient tends to be much closer to 1 most of the time for ETH than it is for Bitcoin. In other words, most of the times, it's Ethereum that dictates the altcoin movements, not Bitcoin. And there's a fundamental reason for this. When we trade an altcoin, when we buy this on a decentralized exchange, the liquidity pools of the altcoins are mostly versus Ethereum, not versus Bitcoin. In other words, when Ethereum goes up 10-20%, the altcoins automatically also go up by 10-20% without a single transaction happening. So really altcoins are priced in Ethereum, not in Bitcoin. That's why the correlation is so strong. In other words, this altcoin rally that we have seen was just an inflow into Ethereum, not necessarily an inflow into the altcoin specifically. This development is surprising because with every bear market, we fell to a point where the average Bitcoin investor was in unrealized losses. Now we suddenly have a rally, but we haven't seen those net unrealized losses just yet. So really, the point of maximum pain has not yet happened, even if we include a potential slowdown in how much people get into unrealized profit and unrealized losses. It looks like things could still turn more bearish. There's the average cost basis of the market, the realized price. So again, we tended to fall below that with every single bear market. That's currently at $52,000. There's also the long-term holder realized price. That tends to go up more consistently compared to the realized price. And that's at a very similar level, currently $49,000. We went below that level again with every single bear market, and we haven't reached that yet. This breakout that we've seen in Ethereum is very specific to ETH. It seems like a broad crypto rally, but why is then Bitcoin struggling that much? History doesn't necessarily have to repeat itself. There's no guarantee that we fall below the realized price. But what I do want to see clearly is inflows into the market. We want to see capital inflows into crypto for sustainably higher prices. Without additional capital, we can't get high prices long term. And what we see here at the top, that's the stablecoin market cap relative to the US money supply. Whenever this turns around, so when we go from outflows into inflows, back to outflows, we also tend to see a turnaround in the market cap of crypto. The inflows stopped in October of last year, and that's when crypto valuations went down. Now, the reason why I like the stablecoin market cap chart is because it's much less volatile. Prices are very volatile, they fluctuate a lot, and it's very easy to lose track where we currently are. But the stablecoin market cap is much more smooth. And so the big question is, what's happening now? Do we already see a turnaround now and inflows into crypto? The last few days have been okay, but it's still too early to tell. Maybe in 2 or 3 weeks we get a cleaner answer. But overall, I don't think this chart already looks that bullish. So I've got my doubts that we can't see another retracement again. Let's again look at other bear markets. So let's compare the one in 2014. So when Mt. Gox and Silk Road collapsed, the bear market in 2018 almost perfectly mirrored that decline. We turned around a bit earlier. In other words, the drawdown wasn't as bad in 2018. The same then happened in 2022. As in 2022, we didn't draw down as much compared to 2018. And so the expectation would be that this time again, we should be turning around earlier. But it does feel like this is a bit too early. We can also measure the drawdown in percent from the all-time high. So that's this chart over here. From the prior all-time high, how much did we fall? So that was 85% in 2015. It was 83% in 2018. It was 76% in 2022. And so far, we have only fallen 52% from the all-time high. Now, if we wait to get all the way down to this bottom line, then of course, we would not have been able to buy the bottom in 2022. So maybe things are recovering slightly earlier and volatility is coming down. But even with that assumption, a turnaround now at a bit over 50% seems to be very, very early. The pattern would have clearly broken if the bear market is already over. Now, we've already discussed the positive regulatory development and also the macro backdrop in yesterday's video. But still, I think everything is going down for a very specific reason, and it's not the macro. I think it's rather the leverage in the market. The reason why Ethereum did that much better compared to Bitcoin is because it just has more leverage. When we look at the open interest, so the bets on the derivatives market, on Bitcoin versus Ethereum, then we see that over the years, it did not grow as much for Bitcoin compared to Ethereum. So Ethereum's open interest went from 13 billion all the way to 70 billion, while the price itself from peak to peak barely changed. So that's over the course of 5 years. And for Bitcoin, the open interest went from 26 billion to 86 billion. So much less in terms of percentage growth. The open interest growth is almost in line with the price growth. That's very different for Ethereum. So Ethereum is much more levered now, which leads to more volatility, which leads to more short squeezes. And that's what I think really went on here. Bitcoin has a market cap that's 5 times larger than Ethereum's. Yet the liquidations that we saw 2 days ago were 1.4 billion for Bitcoin and 1 billion for Ethereum. Shouldn't we expect the Bitcoin liquidations to be almost 5 times as large as Ethereum's? But Bitcoin's liquidations were not $5 billion. They were much, much lower. Again, because Ethereum is much more levered. It has much more open interest. What I think went on here is a short squeeze. Too many people thought that Ethereum would decline again and thus bet on a falling price. And so short squeezing those billions of dollars out of the market, creating a rally, not just for Ethereum, but also for all the altcoins, builds a ton of liquidation fees for the market makers, for the centralized exchanges, for all the professional actors in the space. And usually what happens with a short squeeze is that the price reverts to its equilibrium very soon thereafter. So that's probably what's going to happen over the next days. Now, I don't have a crystal ball. It's simply how I currently interpret the data. Ethereum and the altcoins were levered to the ceiling, and the positive news around regulation were just the trigger that started the liquidation cascade. I don't think it's a coincidence that the altcoins that got shorted the most, for example, Trump, because that token tends to go down long term because of its token inflation, they also squeezed the heaviest. They went up within a few hours by 24% versus Solana. So even in terms of relative performance, Trump in US dollars went up by 32%. So if you ask me, I don't think that this bear market is over. Yes, we might not get into unrealized losses, but we have to see a clear turnaround of the capital flows. And while this is developing fine in the last few days, the turnaround isn't yet clear enough for me. And the price appreciation has definitely outpaced any kind of capital flows. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. If you want to co-invest in my strategies, then there's also the premium membership. There is Bitcoin strategy autopilot. We do stock funding rate arbitrage. We do oil price convergence strategies. Approaches that we believe can make up to 26%, potentially even 38%. You can try it out without any risk. So there's a 7-day money back guarantee. A link to that pops up here on the screen. Thanks for watching and see you next time. Cheers.